Will you agree if I say that yes, you have the potential to do well in life? Everyone does. Picture yourself as a high-performance vehicle with an engine capable of 200 horsepower. The real question isn't whether you have the potential, it's how you harness it. You may take this time to sit down, think, and assess yourself. Are you cruising at full throttle or idling like a lawnmower in the driveway? Imagine if you were a car. Would you be a sleek sports car, a sturdy pickup, or maybe an efficient hybrid? Whatever your choice, the challenge remains the same, stepping on the gas and exploring your full capabilities. Now, let's draw inspiration from the legendary Warren Buffett. He is known for his savvy investment strategies and down-to-earth wisdom. Today, we are delving into a remarkable plan, turning a modest $30 weekly investment into an impressive $6,000 monthly dividend income. It might sound like magic, but it's actually all about strategic investing and patience. So, buckle up as we dive into the world of Warren Buffett and uncover the secrets to financial success through smart investments. Welcome to Financial Literacy. Here, we are dedicated and passionate about bringing you nothing but honest and straightforward facts about your money. We will help you take control of your finances and get you to the next level. Beginners or experienced, this is your one-stop shop for all things financial literacy. First, let's break it down. Imagine you're investing $30 every week. Not much, huh? That's like skipping a couple of fancy coffees or a movie ticket. Now, here's where the magic happens. You're not just throwing this money into any random stock. You're putting it into dividend-paying stocks. These are stocks from companies that share their profits with shareholders regularly. It's like getting a thank you note with cash inside every few months. But how does this small amount grow into a massive portfolio? This is where the mechanics kick in. Listen up because this can bring a good change in your life. So, when you reinvest the dividends you receive, you buy more shares of the stock. More shares mean more dividends, which buys even more shares and so on. This cycle, combined with the natural appreciation of stock prices over time, makes your investment snowball. Have you ever heard of someone turning $30 a week into over $1.3 million? It sounds like a tall tale. We're not even bluffing or pulling a prank. Mind you, it's entirely possible with the right approach. This strategy is all about the art and power of consistency and patience. The stock market has its ups and downs, right? But if you stick to the plan, you are harnessing the power of compound interest, which Einstein reportedly called the eighth wonder of the world. So, what exactly is a dividend reinvestment plan, or DRIP? It is a strategy where you reinvest the dividends earned from stocks back into purchasing more shares rather than taking them as cash. This creates a cycle of growth where each reinvested dividend generates more dividends, leading to exponential growth over time. For example, if you start with an initial investment of $30 per share with an annual dividend of $1 per share, reinvesting those dividends can significantly accelerate growth. Ever heard of the power of compounding? It is where your earnings from investments generate their own earnings. It's like a snowball rolling downhill, getting bigger and bigger. The impact is significant growth in your investment portfolio over time due to reinvested dividends creating more dividends. Isn't it amazing how your money can work for you while you sleep? That is exactly the goal. We don't work for money. Money works for us. Now, let's get historical for a moment. Imagine a hypothetical investment in the S&P 500. Without active management, just sticking your money in and letting it grow, you would see substantial growth. This underscores a core belief: having faith in the long-term growth of the market. America has a track record of bouncing back stronger, and investing in it can be incredibly rewarding. Since you already know about DRIP, let's dig into its several advantages. It is a disciplined approach that automatically reinvests your dividends, simplifying the process and ensuring continuous investment. Plus, it employs dollar-cost averaging, where you invest a fixed amount regularly. This helps smooth out market fluctuations and reduces investment risk. Speaking of dollar-cost averaging, it is all about consistency. It means buying shares regardless of market ups and downs, which stabilizes costs and reduces the impact of market volatility by averaging out the cost of shares over time. Convenience is key here. Automating the reinvestment of dividends ensures consistency and discipline. It's a hands-off approach, ideal for those who prefer not to actively manage their investments. It prevents the temptation to spend dividends on short-term desires, maximizing long-term growth. Want to supercharge your DRIP and see your returns skyrocket? Here's the deal. By investing just $30 per week, you're looking at a total of $1,560 annually. It might not sound like much, but let's break it down. With consistent contributions, you're not just adding funds to your portfolio, you are setting the stage for exponential growth. Over time, these small, regular investments can snowball into a hefty portfolio, thanks to the magic of compounding. But that's not all. We're also talking about dollar cost averaging, a fancy term for spreading your investments over time to reduce the impact of market volatility. By investing $30 every week, you're buying more shares when prices are low and fewer shares when prices are high, averaging out your purchase price over time. This strategy helps smooth out the roller coaster ride of the stock market, making your investment journey a bit less bumpy. Picture this. You're on a long road trip. Instead of speeding up and slowing down constantly, dollar cost averaging keeps your investment vehicle cruising steadily, regardless of the twists and turns of the market. It's like having a financial GPS that keeps you on track toward your destination, no matter what obstacles come your way. So, want to see your portfolio grow like a well-tended garden? Keep those contributions coming, week after week, and watch as your investments flourish. The combination of compounding and dollar cost averaging is a powerhouse duo, enhancing growth and reducing the impact of market swings. When picking stocks, think of it like choosing your favorite superheroes. You've got your dependable blue-chip dividend stocks like Coca-Cola and Johnson & Johnson, who always save the day with consistent payments. The elite dividend aristocrats like AT&T and Walmart, who have been upping their game for over 25 years. The risk-taking high-yield dividend stocks like Realty Income Corporation, offering big rewards but with a bit more drama. And the dynamic, growth-oriented dividend stocks like Microsoft and Apple, who give you the best of both worlds with growing value and steady dividends. Here's a lineup that's as diverse as your favorite team jerseys. NextEra Energy, leading the charge in clean energy with a 2.76% dividend yield and 11.98% annual share price growth. Starbucks, the global coffee powerhouse, offering a 2.01% dividend yield and 8.72% annual share price appreciation. Abbott Laboratories, innovating in healthcare with a 1.42% dividend yield and 10.31% annual share price growth. Home Depot, your go-to for home improvements, boasting a 2.47% dividend yield and an impressive 16% annual share price appreciation. And the ProShares S&P 500 Dividend Aristocrats ETF, scoring with a 2.04% dividend yield and 8.17% annual share price appreciation, focusing on top-performing dividend aristocrats. Looking ahead, envision your investment like a marathon runner gaining momentum. In 10 years, your portfolio could hit approximately $26,000. In 20 years, it could soar to around $127,000. And in 40 years, imagine it surpassing $1.3 million, churning out a steady $6,500 each month in dividends. Oh well, I'm loving these numbers. Numbers really appeal to me if they're huge profits and investments. Patience and consistency are crucial for long-term success. As they say, patience is a virtue. Also, remember that consistent reinvestment and smart stock selection lead to substantial long-term rewards. As Warren Buffett has said, you have the potential. Scratch that, we all have the potential. We just have to harness it the right way. So, are you ready to step on the gas and use your full potential in investing? I hope you've learned a thing or two from this video. Thank you so much for watching. If you think we're awesome, give us some love by clicking the like, share, and subscribe button. Don't forget to comment your insights too. We would love to hear from you. click the notification bell for fantastic tips and hacks in the world of finance. Stay tuned for more. Cheers to financial growth and freedom. See you in our next video.